All right. Good afternoon, everybody. All right. It's been a long time since we have done one of these. The Dow Jones Industrial Average at one point, just a few minutes ago, was down over 1,000 points, thus triggering the spontaneous live stream for a, do we use the word crash? I don't know if we can use the word crash. I mean, we're correction here. Either way, 1,000 points in a day, it is a sell-off. It was pretty rough. We had the S&P is down. The S&P will close below, or has closed below, its 200-day moving average for the first time since November of 2023 or 2022. I'm sorry. Double check me on that one. But this is the first one during the AI bubble that we have had the S&P close below the 200-day moving average. Guys, there's a lot going on in the markets. I don't know what is singularly driving this. I don't think it is any singular thing driving this. I think you got a couple of things are combining. Now, of course, tariffs and some of the comments that President Trump made this morning are probably front and center in people's minds. The president refused to rule out a recession. Certainly some of the GDP data that we've gotten recently has been recessionary. That being said, I went back and I looked at the long-term charts, and I looked at when this sell-off started, and it looks like there was really like a 3-day period. If I had to say, when did this sell-off really start? Besides today, obviously, it hit its stride. It would be between February 18th and 21st. Those were the days after the market topped and when we first started to sell off. So I went back and I looked at what were the stories, what were the big stories in finance of those days. On February 18th, everybody was talking about the Doge dividend, about the prospects of stimmies coming back. All right. We also had this rumors on the 19th of a housing crisis in Washington, D.C., that so many government people were getting laid off, that houses were getting thrown up for sale like crazy. Now, that rumor wasn't necessarily true, but consistent theme there. The job cuts in D.C. obviously marked the top in this market, so you can't rule that out. On the 19th, we had the Libra rug pull. Remember, Javier Milei got involved in a crypto scam? Hard to rule that out, guys, because we're watching Bitcoin get just clobbered here at this point. Also on the 20th, we had Walmart earnings that were showing disappointing growth. Walmart stock got clobbered on those earnings. Little bit of sign of consumer stress on February 20th contributed to that being the top. What else did we have? A big time drop in Palantir happened on February 20th. That was when Secretary of Defense Hegseth announced the 8% a year or 5% a year for the next 8 years, whatever the numbers were. Big time defense cuts. There's that repeat of job cuts in D.C. playing a role. On the 21st, we had the United Health DOJ probe. That was a big one. UNH is the single biggest Dow component, and it was down big on that day. Also on the 21st was the Bybit hack. That I think it was $1.5 billion was hacked, the biggest hack in crypto history. Obviously, crypto has been down pretty much every day since. That's playing a role there. And on the 21st, we had a couple of big stories coming out of Japan. Japan's inflation hit a 2-year high, and we had this story about Nochu, Norinchukin. Their CEO quit shortly after revealing that their pile of unrealized losses was getting even bigger. So all these things combined, this timeline, what do we got? We got consistent themes, government cuts, very Trump kind of thing. We had some consumer stories in there. We had some fraud stories in there. Obviously, the crypto and the crypto bubble and Japan. And I think all of these things combined are forming this Voltron of bearishness, if you will. And that's taking us down. And then, hey, we got this trade war going on. That's a big one, too. Now, a lot of people are saying the AI bubble. I think the bursting of the AI bubble, which it hasn't happened yet. I do think the top is in on AI, but right now we're just at the phase where they have to blow harder and harder. The bubble hasn't quite burst. They don't have gum all over their face yet, but you know it's coming. The Nvidia earnings, Supermicro dodging delisting by putting out a 10K that was just loaded with, I double dog dare you to buy this crooked company stock. Those were not enough to reverse this sell-off. They didn't start it, but they couldn't stop it. And so, yeah, we got a lot of things contributing to this situation. We're going to pull up a couple of these stories today. We're going to look at a couple of the charts, really see what's going on here, see if we can put our finger on what's driving this market. And the big question, will the dip buyers show up? They showed up a few minutes after I posted this. I mean, like within 60 seconds of me posting this spontaneous live stream pretty much marked the bottom of the trading day. There was a little bit of dip buying came in for a couple of minutes there, but it didn't last very long. And we actually closed on a red candle for the day. So I don't know if we're going to bounce here or not. But before we do that, let's shrink my big melon of a head. Let's say hi to my buddy Mish. Let's bring him in here. And, well, also, this is about the time where I ask you guys to hit that like button, hit that subscribe button if you're new here. We don't do this every day. Typically, every morning we do a live stream like this, but we reserve these spontaneous live streams for big days like this 1,000-point drop we had today. Mish, how we doing today, brother?
Pretty good. I was just trying to figure out when's the last time we did this. I think it was back in August.
The last time we did a spontaneous live was actually during the banking crisis in 2023 was the last time we did a spontaneous live stream. We had 1,000-point down day, but it came on, I forget what happened. It was like right on a Patreon Zoom day, so we didn't do the spontaneous live that day. And then before that, you got to go all the way back to 2022 for the last time we did a 1,000-point down live stream. So it has been a long time since we've done this. This has been a very long bull market. And this bull, we're still in a bull market, by the way. I mean, we have not reached, we're probably in correction territory now. I haven't done the math as of closing price today, but we're getting pretty close to correction territory if we're not in it yet. But we're not in a bear market.
Some indexes are getting in correction and some are getting close because I think the Dow's at like 7 down, 8 down. S&P's right around there, but the Nasdaq, I think, crossed 10 today.
Okay, so we've got the Nasdaq in correction, and that seems right because the Nasdaq has led this rally big time. That's an understatement. So the Nasdaq should lead the sell-off. Some might say nature is healing itself. Now, let me ask you, Mish, of all those stories that I listed at the beginning, the Doge, the DC housing rumor, the crypto hack, the Malay thing, the defense spending cuts, the Japan inflation, did any of those jump out at you as, we don't need to say singular cause, but did any of those jump out as you as particularly potent, maybe driving the sell-off?
There were two for me. One was the Bybit hack because, you know, in the last year since the ETFs came up, we've gotten a lot more of people in Bitcoin that haven't been there before. So new buyers. So if you think that all of a sudden your secure asset is no longer secure, you are going to get rid of it, right? So there may have been a little bit of that. And then on top of it, you know, with the lack of defense spending, and if we cut, you've said before, you know, austerity sucks, you know, NIMBY and all that. But, you know, if you cut 10% off of the defense spending, that's $90 billion out of the economy. That's not messing around. That's straight out of the economy.
Yeah.
So yeah, that'll hurt it too.
And I think I don't remember the exact number, but it was something like 5 to 8% a year for 5 to 8 years is what they were proposing. Like if you were to annualize it, it was going to result in, if they ever followed through, big if, right? We're talking DC here. But if you were to summarize all this, like you were looking at like cumulatively like 35 to 40% cuts to the defense budget if they actually followed through with all of this. Mm-hmm. You know, you're talking probably a few, 100,000 jobs then? I mean, how many people do you think really work in the defense industrial complex?
If you look at it, we had our trade deficit go from like 90 to 150. That's what, about 60 billion?
Yep.
That dropped us 3% on GDP now.
Yeah. That was a big drop, that trade deficit.
So that just tells you now. So then you roll into, you know, 90 billion coming out. So you're looking at that again. So we're going to, if things go as they are, right, we're going to see somewhere between 250 and 500 billion coming out of the economy. That's going to
recession.
Hurt.
Yeah.
And GDP
that's an instant recession.
So we may end up being in a recession, you know, 1 or 2 quarters, and we pop back out because we get low enough that there's only one way to go.
Yeah. I mean, really, you've got 10% of consumers propping up this economy right now, largely fueled by runaway fiscal deficits. Right? I mean, there's been a number of articles over the last couple of days talking about how 10% of consumers now make up close to 60% of all consumption. Right. And the bottom 90% is at the lowest percentage they've ever been at. So, you know, consumer spending obviously being the biggest percentage of our GDP, that's a big one right there. Now, if you're talking any slowdown among the top 10%, which the quickest way to get that is for the government to slow down their spending because, all of a sudden that money is not being pumped directly into covering asset prices or inflating asset prices, then yeah, I think a recession is a foregone conclusion here. I also think we've been in one all along. It's just we've been able to maneuver the math by creating this scenario where 10% of consumers can create the illusion of widespread prosperity. So, I won't shed any tears for this recession because I think most of us have been living in one since the middle of 2022. You could argue further back than that, but
I argue that goes all the way back to 2008, and there may be even some tendrils that go back to 95.
Yeah, and sooner or later, somebody's going to drop that 1971 and that 1913 while we're at it. I mean, so how far we want to zoom out here? Let's limit ourselves. Why don't we go through the markets and look at what actually happened today? What we're looking at up in this screen here right now, S&P 500, it ended up closing the day down 155 points or 2.7% lower. Of note, look at that volume in the close. Look at that big red spike in volume at the close there. Not looking so good there. And also of note, right here, guys, this, like to the minute, is where I posted the live stream for being down 1,000 points in the Dow. So the dip buyers, it's like they were waiting for me to give them the signal. You guys, not funny. But anyway, now let's get rid of the marks I just made here. Let's zoom out a little bit more. Let's look at one-day candles here because this is important in the one-day candles. First thing I'm going to point out right here, guys, look at that. First close below the 200-day moving average in quite a while. That is technically significant. I was mentioning on the morning live stream on Friday that if the dip buyers showed up, that would be where they would show up. They showed up at lunch. We closed above the 200-day moving average, but it didn't last. It gave away pretty much at the open this morning. And, of course, up here, this is where the all-time high was put in on February 19th. When I was mentioning those stories, I started at February 18th. It looks like the biggest drop came on the 21st. That was the Japanese story. That was also the Bybit hack. Was the biggest drop there. And then, of course, we had another big one on March 3rd. I don't remember what happened March 3rd. Was that CPI? I don't remember what that was that day. And we had a big one on the 27th. That was the day after Nvidia's earnings. You can see Nvidia's earnings accelerated the sell-off, but it wasn't enough I don't think that is what triggered it. Now, I do want to zoom out a little bit on this chart here because we got to go way back. Okay, it was November of 2023 was the last time we were below the 200-day moving average on the S&P 500. So it wasn't quite the beginning of the AI bubble. That was November of 2022 when the AI bubble started. But it has been quite a while since we've been here. I mean, we haven't even touched the 200-day moving average, not even close, since November 2nd of 2023. So this is a big breakdown here. And let's just move on, shall we? Looking at the Dow ended up closing down 836 points to finish the day. Once again, the dip buyers showed up right as I posted. Thanks, you guys. Thanks for nothing, dip buyers. You're making me look bad here. Now the Dow also closing below the 200-day moving average. We're switching back to daily candles here. We have lost the 200 line. When's the last time the Dow touched the 200 line? We're going back also November of 2023. So that's 2 out of 3 indexes. Their first visit.
That's pretty much the start of the bull market, right?
I think you could start the bull market realistically November of 2022 if I had to put a day on it, because we were actually in a bear market for most of 2022. We had dropped more than 20% here. It started with all the big tech layoffs in the beginning of 2022, and it ended with ChatGPT. That's when we bounced out of that, and we've been pretty much in a bull market ever since. So I'd probably go back a little further than 2023, Mish, but not by much. All right, so we got 2 out of 3 indexes. Let's look at the Nasdaq. Same story. Dip buyers showed up right as I posted. Ended up closing down 727 points. So 4% in a day for the Nasdaq. Absolute bloodbath in the Nasdaq today. Worse than the other indexes, right? What was the S&P gave up? 2.7%. The Dow didn't even give up 2%, 1.95%. But the Nasdaq lost 4%. So by all means, tech is leading the way lower here. Let's look on the daily candles here. We actually lost the 200-day moving average a couple of days ago for the Nasdaq, so we are leading the sell-off here. As Mish pointed out, are we 10% off our highs? Oh yeah, we are more than 10% off our highs. So the Nasdaq is in correction territory. Now the Nasdaq had a visit to the 200-day moving average back on August 5th, but we only touched it. We closed back above it, so we haven't had a close below the 200-day moving average since October 27th of 2023. So once again, guys, this is a big technical breakdown across the board in all three indexes here. Not a good look for stocks. Before we get too far ahead, I want to say thank you to a couple of people, by the way. Thank you, T.A. Chapman, who says burn it down. All right, so T.A. is look, I share this sentiment. Things like burn it down don't always go over so well. They don't test so well in focus groups, but I dig this sentiment here, right? The prosperity that we're observing in this chart going back the last 2 years has not been a shared one. I think we can all agree on that. He's saying burn it down. This morning you said something to the effect of not understanding how Trump means we'll be rich from tariffs. What if he means buying the bottom of the self-induced crash? Well, I would say that would require you to, number one, emerge from this self-induced crash with a job intact and the cash reserves needed to buy said dip. And that's kind of the rub right there, right? Everybody thinks it's a great idea to buy after the market crashes. The market is not nice enough to let you know when the bottom is in. And sometimes market crashes have a way of wiping you out. Even if you think you're prepared, if you lose your job, you can burn through those cash reserves pretty quick. So I like the idea of, positioning to buy up assets on the cheap. If Trump is serious here, and if he really wants to bring us away from this easy money addiction, and if he really wants to reshore manufacturing and bring that kind of job back at the expense of a much cheaper dollar, you're talking about throw away the playbook from the last 50 years. All right, then this is not a buy the dip moment if we're serious about that's what we want to do, because that kind of change, that kind of upset to the global order has a way of creating lost decades, not dip buying opportunities. I'm not saying that is what's happening here, because I seriously doubt the Fed is going to sit idly by while the market crashes. I think sooner or later Zerp and Burr is coming back, whether Trump wants it to or not. They do want the lower rates. I don't know that they want the QE to come back. But yeah, I kind of share this sentiment. The whole burn it down thing, again, that has certain arson connotations. Go ahead, Mish.
I was going to say, he's just saying the roof is on fire.
The roof is on fire. We don't need no water. Let the MFer burn. Yep. Yeah, I could see that. Thank you very much, T.A. Chapman. I appreciate the support of the channel, by the way. And thank you to Mr. Dan Hedin. Says, did Doge lay off the plunge protection team? Now we're thinking outside the box, Dan. I like the way you think. To my knowledge, no, the layoffs have not extended to the 400 PhDs at the Federal Reserve and the plunge protection team at the New York Fed. What do they call it? The open market. What do they call the Fed's trading desk? They have a term for it, but the nickname is the
You're right. It's open market something.
Yeah.
It's been too long.
But clearly the PPT, I mean, maybe they snapped out of it those last couple of minutes this afternoon, but they sat it out today. I can tell you that. Thank you, Dan, for supporting the channel. Thank you, Mr. Chapman, once again, gifted 10 Nobody Special Finance memberships. Hey, thank you so much, TA. And guys, all you new Melon Heads, say thank you to TA Chapman for the membership and welcome to the Melon Heads. Armando Reyes is saying the sky is falling. The sky is falling. We're a long way from the sky is falling. Are you sure that's not like Boeing landing gear or something? I don't know. Maybe that's a little bit of a 2024 kind of story. Nothing has fallen off of a Boeing plane for a couple of days now. It's been a good year for Boeing. Let's not go too hard on them. But look, this is I don't know. Let me just check. Let me just keep myself in check here. What's the bull case here right now? We still have an expanding money supply. Let's play the Jack is Chicken Little card. Let's entertain that notion for a minute. What are the bull cases? We still have an AI bubble that is inflating. We still have big tech CapEx is undeterred. There have been some hints that it might be slowing, but that's still in place.
We still have 4% inflation, whatever they're telling us it is. I forget off the top of my head, 3.8, something like that. So that is still pushing on asset prices.
Yeah. Unemployment is still relatively low at 4.1%, right? I think
the number we got. Mr. Phillips there would say it's probably should be around 4.2, so it's right in line.
You had to drop that Phillips in there, didn't you? Yeah. So there's still a bull case out there to be made. I obviously am not sitting here trying to make the bull case. I'm forcing myself to make the bull case right now. You still have a consumer who, on average, is spending, right? I think most consumers aren't spending, but you got your 10% that are still buying, right? Luxury cars are still doing pretty well. Boats are still doing pretty well. RVs, not so much. The RVs are not doing so. What do they call them? Land yachts? Is that the name?
Them are recreational vehicles.
Yeah. The land lots, the land yachts aren't really moving so well.
Mm-mm.
Anyways, thank you, Armando. Appreciate the super chat, sir. And Vacation Time 247 says, will the FOMC SEP, that is the Federal Open Market Committee, by the way, the Fed, and the SEP is the summary of economic projections, i.e. the dot plot, will that next week show fewer rate cuts than the market has priced in? I don't think so. I think if anything, the FOMC is going to pivot dovish here. I don't think they're going to. I think they're going to stay put. I don't think they're in any big hurry to help Mr. Orange. But that being said, we will get to the point where asset prices fall far enough, it will develop stress in certain parts of the financial system. What's the up this way?
Oh, so someone was asking me some of the things I've got on the shelf behind me because it looks like pretty cool stuff.
Yeah.
And I was pointing at the statue of the two old people I picked up in, I want to say Alghero, Sardinia. So
I've never been to Sardinia.
Well, I lived there for 3 years with the fam.
So to make the point, will the FOMC next week show fewer than the market has priced in? We got to look at what the market is actually pricing in to answer that question. I would say the FOMC is going to show 2 rate cuts as the most likely outcome tomorrow. Let's see. We haven't looked at Fed Watch in quite a while, though. So let's go to CME Group's Fed Watch tool, right? So right now we are at 425 to 450 is our current target range. And we've got a 95% chance of no change in March next week. And I agree with that. I don't think the Fed is going to do anything next week unless this sell-off really accelerates. I think it's too late for them to change anything. So now let's go to December, and they're looking at 350 to 375 right now as the most likely where we end the year, which is 3 rate cuts are now being priced in by the end of the year. I'd be surprised to see 3. I think the Fed will say 2, but I could be wrong about that. And again, it depends on how much legs this sell-off has. But right now, the market is saying 3. So will the Fed next week say more than 3? I highly doubt that. I highly doubt it. Vacation time. I'd be surprised. The market would rip higher if the SEP comes out tomorrow showing, it's not tomorrow, but what is it, next week? Or Wednesday, maybe. Showing 4 rate cuts. I'd be really surprised to see that.
I'm still saying they're going to hike by the end of the year. I'm throwing it down.
Whew, that would be. It depends what inflation keeps doing. I mean, we've had plenty of inflationary data points recently. Today wasn't inflationary, but a hike could happen. I wouldn't rule it out. It could happen. Right now, the dollar today, it ended up closing the day a little stronger. I think maybe that was driven by the euro. When the Greens failed to back the German defense cut package that we talked about this morning on the live stream, I think the euro weakened a little bit on that when the euro had been on a tear for a week before. I also think that's going to reverse because I think the Greens rejecting the package means the package gets bigger, which means ultimately the euro strengthens even more. So I'm disagreeing with Mr. Market here on the direction the euro should have gone today. But that weakening of the euro sent the Dixie a little bit higher by about 14 basis points, 103.98. Now, here's something in terms of the Dixie. This we got to watch. Look at the USD JPY trend right now. And I tweeted this thing out a little earlier today in my Twitter feed. We're at 147.29 on the yen to USD. Now, the last time we were here was August 2nd, if we rule out the rebound from that. But we're right where we were on August 2nd. And, of course, August 2nd was one trading day. That was a Friday before that August 5th panic on the yen carry trade unwind. And it was the rapid, disorderly strengthening of the yen that caused that panic about the yen carry trade. Now, when I said the rapid and disorderly, you can see how steep this decline was. What we're doing now, what we've been doing for the last couple of weeks, has been a much shallower decline. It's been a little bit more orderly, but I'm pretty sure Japanese banks are getting nervous here. I'm pretty sure the traders over there are getting really nervous, especially watching Bitcoin sell off, watching tech stocks sell off. And there's a couple of other things going on that tells me we might be pretty close to that repeat of what happened in, when did that first happen? In August 5th, when they just mysteriously shut down all of the brokerage, right? It was like Vanguard, Schwab, TD Ameritrade, Fidelity, like they all went down pre-market.
Unless you were logged on when it went down, you couldn't do anything.
Yep. And what is the effect of that? They took away the sell button. That's what they did. They rigged the market so retail couldn't sell. That's what they did on August 5th. So what's the over-under? They do that again. Are we going to have another day where all the brokerages mysteriously go down for maintenance at the same time? Let me know in the comments if you think that's coming. But there's a couple other things that say, yeah, maybe we will see that, because look at the Japanese 10-year yield. Back in August of last year, the 10-year yield, we've got to zoom out a little bit, we were way lower. August 5th, the Japanese 10-year was 0.775. We are now at 1.56. Now, why does that matter? Because remember, guys, the yen carry trade is an arbitrage opportunity. You borrow cheap yen, you convert to dollars, and then you buy U.S. assets. So the difference between the interest rates in the U.S. and the interest rates in Japan is one of the keys to the yen carry trade, as well as the difference between the yen and the dollar. Now, look at what's going on right now. This chart is showing the U.S. 10-year yield minus the Japanese 10-year yield. This is the gap between the interest rates in Japan and in the U.S. And so this is basically the arbitrage opportunity. Let's say you're going to borrow 10 years in Japan and then use it to buy a 10-year U.S. government bond yield. Right now, you're making 2.665% net interest, minus your trading fees, of course. Back on August 5th, back when everybody was panicking, that was better by about 10 basis points. So right now, the arbitrage opportunity between interest rates in the U.S. and interest rates in Japan is lower than we were on August 5th. The Japanese debt is more expensive than it was. And of course, the yen is pretty much right where it was right when that panic set in. So, you know, we also mentioned what marked the top in the S&P 500 and in a couple of these stories. Well, it was February 21st. Let's look at the 21st. Here we go. Right here, I'll mark it. February 21st was when inflation in Japan hit a 4-year high. And February 21st was when the CEO of Norinchukin, one of the biggest banks in Japan, abruptly resigned. And we found out their unrealized losses were much bigger. So, you know, you could argue this sell-off in the S&P traces its roots back to problems in Japan. And the problems in Japan are starting to look an awful lot like August of last year. Oh, man, Michael Gayed is going to be unbearable if that happens again. He'll be right. And a vindicated Michael Gayed is a loud Michael Gayed, isn't he? So.
He is. He is.
Hey, he's earned it, man. He has put a lot of work in on that yen carry trade over the last few years. Looking over at some of the bonds in the bond market here, it was a flight to safety kind of day. The 30-year dropped almost 7 points, 4.55%. The 10-year dropped 9 points and change, 4.225. Looks like the biggest mover today was the 5-year at 3.988. That's off almost 11 points. The 2-year dropped 9.5 points to 3.906. And the 1 month pretty much unchanged.
I was going to say, I'd like to point a couple things out about this. Most of them are medium is where the moves were.
Yep.
So that for some reason people are piling into the mediums. But as far as risk goes, the current riskiest bet is the 1 month.
That's interesting. The riskiest bet being, now, are you deriving that based on the yield or?
Well, no, yeah, I'm basing that on the yield, right? Because yield is a measure of risk.
Yep. I would agree with that.
Yeah.
And of course, I mean, to get higher than the 1 or the 2 month, you got to go out all the way to 20 years. Yeah, the yield curve's a mess. It's a mess here. And I mean, the 30-year, you get an extra, 24 basis points for 30 years versus 1 month. Yikes.
Yeah, that's what I was saying on the basis of risk, it's right there. And sorry, it tells me, because we did this, it's probably 22, where that 1 month, and we were talking about how that number moves up as it was inverting, where the risk is. Well, currently our risk is at 1 month. It's riskier to put money into the 1 month than it is the 3 month.
That's what the yield curve would suggest to us. And
Yeah.
obviously, I mean, I don't think we're looking at a government default right now. Although, I mean, hey, the shutdown circus is still going on in Congress.
Yeah, we got 4 more days.
Is that when the government would shut down? Yeah.
And we still have the debt limit to deal with.
Yeah, oh yeah, that's still out there, and the revaluation of gold, and who knows, or will they? Let's talk about gold, because that may play a factor in this debt limit circus. Gold was down today, $24, 0.84%. So, in a day that might be described as a de-risking, as a flight to safety, the world's #1 safe haven asset, gold, was down. Now, my theory is that you had too much leverage built up in the gold trade. Too many people borrowed money to make levered bets on gold because it was near all-time highs. And when the market starts to de-risk, those guys have no choice but to sell those levered bets, and it might drag down the underlying. I mean, short of that, I'm having a hard time explaining why gold would be down today. What do you think, Mish?
Yeah, I think 100%. We're talking about deleveraging here. People are having to liquidate assets to go pay other stuff, and there's so much cash moving right now.
Yep. I mean, we had a little bit of a stronger dollar, 16 basis points. That's not enough for a $24 move in gold. And yields are lower. Yields lower usually puts upward pressure on gold. So I was a little surprised to see gold down as much as it was today. So I'm going to stick to deleveraging there as the story for
gold was really tough on the way up on the Dixie, right? It gained while the Dixie was gaining. So whatever is opposite. So we may see a little opposite coming back down.
Yeah, we are seeing that inverse correlation between gold and the DXY break down a little bit for the last year or so. Gold rallied in the face of a sharply stronger dollar for most of that recent bull run that it's had. That's a great point. Silver's looking about the same here, down 42 cents, 1.3% lower, even worse, $32.10 for spot silver. I still like the shiny though. Pretty much all the metals are down. Copper's down 1.4%. Platinum and palladium both down. Crude oil's down too. A little bit of recession woes here, maybe $1.05 lower for April WTI futures at 65.98. Also, OPEC getting closer to producing more oil. When was that? Is it April?
Yep.
Yeah, April. They're going to start pumping more. So I think we're probably looking at oil moving lower for the next couple of months. Certainly demand, if this recession talk continues, we're going to see demand problems. And of course, the biggest loser today, besides the Nasdaq, is Bitcoin here, down another 2.3 points, below 80,000, below the 200-day moving average, 78,829 as priced on Coinbase. Now, Mish and I were talking about this earlier. Where might Bitcoin catch a bounce here? I have a theory that we'll probably catch a little bit of bounce around this prior all-time high. I'm going to put a horizontal line there. That dotted red line, that is the high from March of 2024, and that's also where we ran into a little bit of resistance in October before ultimately breaking above that level. So that's right around 73,400 is where I'd say if we don't hold that level, we're heading back into the God knows where. I don't know, maybe even the mid 50s if we don't hold there. What are your thoughts on this one, Mish?
I think where did we cross out of that channel at?
We broke that channel right around 65,000 on October 15th.
That is the one I've been looking at. I think that is our ultimate kind of support right there. When they allowed that channel to go. Right.
And we did fail that level one time when we attempted to break out of it. So yeah, I could see that one. Mid 60s to mid 70s. Either way, Bitcoin's not looking good here. And obviously we saw a lot of crypto headlines when we were talking about what started this sell-off. You had the thing that happened to Malay in Argentina, which I think was just such an unforced political error. And I think Malay really screwed the pooch on that one. Like, what do you think is going to happen when you release a shitcoin, really? And Trump did the same thing with Trump.
There is he handed his opposition just a a smoking gun, man.
Absolutely.
Please,
And look,
target
hey, our
right
guy
here.
did the same thing, didn't he? Right? Trump coin, Melania coin. Like,
Yeah.
um, I mean, once Huck Tua coin got rugged, you'd think people would have stopped doing this stuff. But hey, whatever. Um, Also on the Bybit hack on the 21st, that was a big one here. When was the February 21st? Let's put that up here. The February 21st wasn't really the big sell-off day. That's right here.
Yeah.
The big sell-off in Bitcoin really started on the 24th. I don't remember what that was on the 24th, to be
Was
honest
that a
with you.
Friday, Monday thing?
That was a Monday. Yeah. And then, of
Because I
course,
think
we
that
had that.
Bybit went off over the weekend.
Yes, that was the
I
Friday. You're
understand
right.
the 24-hour nature of Bitcoin, but a lot of people turn it off during the weekend.
Yeah, and whoever needed to move money around to try to, say bail somebody out or try to adjust for all of the liquidity strain that was happening after the Bybit hack, that wouldn't have hit until Monday when the banks reopened.
Yep.
So, okay, maybe maybe Bybit hack was what caused this, right? That big sell off there. Yeah, absolutely. I could see that. Either way,
So,
Bitcoin playing
yeah.
a big role in this sell off here.
Now, I think it's a little bit funny that it's been a huge sell-off since the crypto thing at the White House, the big meeting they had.
Yeah, since the unveiling of the strategic Bitcoin reserve and the national crypto stockpile.
Yep.
And I'll be honest with you, I think the news was as good as it could reasonably have been expected. I think the crypto guys really, some people aren't going to take this well, but I think you guys had your heads way up your arses when it came to what you expected from the strategic Bitcoin reserve. The idea of a president with a low single digit majority in Congress was going to somehow buy Bitcoin for a strategic reserve. I don't know politically how they expected that to happen. It seemed like a non-starter to me the whole time. And really the fact that the best thing you could have hoped for was that these government dumps of Bitcoin were going to stop. And they got that. That's what they got with the strategic Bitcoin reserve. So I think that was just expectations were way too lofty for that. And of course, the whole national crypto stockpile, the fact that they separated the two, I agree with the decision to separate them, but a lot of people didn't like that.
Right.
The XRP army sure didn't like that. They were hoping that would never happen. And there was some particular language that said, like the Secretary of the Treasury was authorized to buy more Bitcoin if he could do so in a budget neutral way. It means without going to Congress. Nothing like that for the other cryptos, for the Ether, for the Cardano and the XRP. That was as Protos described it, a sell only national crypto stockpile. That disappointed the crypto bros. All right, let's talk about a couple other of these stories real quick, guys. We got some interesting information today. Let's talk about a few weeks ago. We got the Michigan 1 year ahead inflation expectations, and we had a big jump in inflation expectations for the month of February. This was, when was this last released? This was March 14th. So no, not March 14th. I'm sorry. This is a slightly old data point. It's been out for a couple of days, but you can see inflation expectations rising here. Right. And charts like this is why I wouldn't rule it out when Mish says we might be looking at the possibility of a rate hike this year. I'd say it's very unlikely. But when you see inflation expectations going vertical like that, you can't rule out a rate hike, no matter what the stock market is doing. But then today, we get this one. We get the New York Fed's inflation 1 year ahead expectations. This chart is measuring the same thing. And it ticked up from 3% to 3.1%. And not for nothing, but this looks like the chart of a gauge that's broken. When I see the thing is flat for months, ticks down, ticks right back up, and then ticks back up. I don't know which one to believe here. They're supposedly measuring the same thing. Households, the Federal Reserve Bank measures like 1,300 households. They vary who they're asking. Michigan is random polls of consumers. But look at these two charts side by side here now. All right, the top chart, that's your Bank of New York Fed. And then your lower chart is your University of Michigan inflation expectations. And these charts are telling two totally different stories. I don't know which one to believe here.
Well, I
But I
do
put
have a
this out.
theory on this.
Go ahead.
The bottom one is what the expectation is. How far out is it
1 year for both charts.
for both charts?
Yep.
Yeah, somebody's math is broken.
Yeah. When I saw this, I was thinking somebody needs to flick their gauge. Like they're measuring the same thing. 1 year ahead, average consumer inflation expectations. And not for nothing, like look at the Michigan chart down low there. Not just the rapid rise that we've seen in the last 4 months. That's pretty staggering. But we're almost double where we were. Well, not double, because you got to look at the y-axis too, right? The axes aren't exactly the same, but we are significantly higher than we were in the previous high in April, May of 2024. You guys remember the inflation scare we had at the beginning of last year when for 3 months in a row, CPI started to tick up? Now, that inflation scare of 2024 had a much bigger impact on the New York Fed's expectations than it did on Michigan. And now we've got the opposite. Now we've got Michigan having a much bigger impact than on the New York Fed. So maybe they're both off.
One of them is asking that. Well, obviously they're asking questions differently, but I wonder if the bottom one has a rolled-in effect of raising prices due to the media stories, right? And the other one doesn't. They haven't rolled it in yet.
So let's read the language on how they measure it. Let's see. What do they do? All right, for the Michigan one, they're saying the index of consumer expectations focuses on 3 areas: how consumers view prospects for their own financial situation, how they view prospects for the general economy over the near term, and their view of prospects for the economy over the long term. Each monthly survey contains 50 core questions, each of which tracks a different aspect of consumer attitudes and expectations. The samples for the surveys of consumers are statistically designed to be representative of all American households, excluding those in Alaska and Hawaii, each month with a minimum of 500 interviews, and it's done by phone. All right, so that's pretty general there.
Yeah.
50 questions, 500 interviews done by phone.
And
Now,
I don't know if I could do that phone call.
Yeah, that'd be a lot of fun, wouldn't it? Now, the New York Fed one, let's see, how do they measure? In the U.S., inflation expectations refer to the median 1 year ahead expected inflation rate and are part of the survey of consumer expectations. The expectations are based on the nationally representative internet-based survey of a rotating panel of approximately 1,300 heads of household. So somewhere in the nuance of those 2 data points is a big delta.
Yeah.
I'll be honest with you, reading those definitions only made me more confused. It didn't help at all. I don't know. Did it help you?
No.
Yeah, that got me nowhere.
One sounds like it drills down more than the other. Is only what I'm getting out of that.
I can tell you, looking at these 2 charts here, the Michigan one seems more volatile or more responsive to stimulus, depending on how you want to view it. The fact that the New York Fed one stayed so unchanged for so long, like look at all those 3.0s in there on the New York Fed. You should see more noise in a chart like that, especially when you're talking to 500 different people. I find that one pretty surprising. But all right, let's talk about a couple of other ones that we got today, and then we'll probably wrap it up. This one was kind of funny. This is actually from a couple of days ago, from March 13th or March 3rd. Look at the headline. Nvidia's unofficial exports to China face scrutiny after the arrest of silicon smugglers in Singapore. And I put this one out today. That's a hell of a way to refer to these things. Unofficial exports to China. Why would they phrase it like that? It's illegal. Why don't you just say illegal? Why are they using this deliberately soft language? And this is where I'm getting into, okay, what role is the AI bubble playing in this whole thing? Because honestly, I think the AI bubble, it's playing some role here, but I don't think it's the primary driver of what this sell-off that we've seen. If Nvidia had posted better earnings, maybe we could have stopped this sell-off, but I don't think it's what started it. This sell-off was well underway when Nvidia reported. But this just goes to show, the reason why I showed this language is obscene. Nvidia's unofficial exports to China. Call them what they are. They're illegal exports. And we're talking about an 18 or so trillion dollar stock bubble is being propped up by, number one, accounting fraud. I've documented so much of that on this channel. I won't get into it. But number two, to a large extent, illegal sales to China that you'd have to be deaf, dumb, and blind to believe weren't happening at this point. They've already started arresting people for it. I showed you in that video about a month ago, warehouses full of Supermicro servers. I showed you a Chinese guy holding up his NVIDIA H100 saying, this is my illegal NVIDIA H100. Like, what do you need to believe that this is happening now? Now, the mainstream financial press is now finally acknowledging that it's happening, but they're using this soft language, unofficial exports. Come on, guys. Unofficial? Like, call it what it is. It's illegal. Crime. Crime is the secret ingredient to this bubble. All right. Now, there's a couple of other stories that were going on here. Let's talk about these. Well, first of all, NVIDIA's chart. Here's something I want to show you. NVIDIA also below its 200-day moving average. All right. Trading at 106 here. That's about $1,060 split adjusted. NVIDIA has not been below its 200-day moving average since January of 2023. All right. So not even November, right? This goes all the way back to ChatGPT, right? It was the end of November 2022 is when ChatGPT was released. And NVIDIA has not seen its 200-day moving average for the entirety of this bubble. This is very significant. Something else I would point at here is look at the 50-day moving average shown in blue and the 200. All right. We are looking at a death cross within a couple of days here in NVIDIA stock. And I don't know what's going to happen when that death cross gets here. My guess is the algorithms are going to start selling this shit when that happens. Call me crazy. It's not that crazy to imagine. I mean, there's plenty of algorithms that are programmed to sell as soon as that happens. And you can see the 50-day moving average is angling down here. It's picking up steam to the south. Watch out for that crossover, guys. That's going to be ugly. We also got this one today. Exclusive. CoreWeave wins a $12 billion cloud contract from OpenAI. This one just hit a couple of minutes ago, ahead of their IPO. Now, I'm reading a lot into this one, but let me just show you some of the highlights here. CoreWeave will issue shares worth $350 million to OpenAI in a private placement. They have not IPO'd yet, and they're already diluting their shareholders that they don't have. All right. And they did this also last week when they bought, what was that AI company? It was like Weights and something, not Weights and Measures. It was something different, but Weights was in the name. They bought this other AI company last week, and they bought them for shares. They're issuing stock like crazy before they IPO. Who wants to line up and buy these bags? Deal boosts CoreWeave ahead of their IPO. They're aiming for a $35 billion valuation. CoreWeave, an artificial intelligence startup backed by Nvidia, has signed a 5-year cloud computing contract worth $11.9 billion with OpenAI ahead of its hotly anticipated stock market launch. People familiar with the matter told Reuters. The deal will give OpenAI a stake in CoreWeave, which will issue shares worth $350 million to the ChatGPT maker through a private placement. At the time of its initial public offering, the sources said, requesting anonymity as discussions are confidential. Now, this is kind of interesting because we have seen all these stories about, like the TD Cohen story about Microsoft possibly canceling data center projects, something Microsoft kind of denied, kind of confirmed, depending on your point of view. And then we had the story last week that said Microsoft was canceling CoreWeave contracts. And then CoreWeave came out and said, no, we haven't had any contracts canceled. And we've also seen stories about things between Microsoft and OpenAI are not exactly simpatico at the moment. We've had a little bit of Satya, a little bit of Samay friction over these last couple of weeks. Is this an OpenAI Microsoft divorce in the making that we're seeing here? And maybe CoreWeave did lose their Microsoft contracts because the Microsoft contracts that they canceled were meant to go to OpenAI, and OpenAI said, screw you, buddy, I'll go sign those contracts myself. Maybe that's what we're seeing here. But I would remind you guys of a couple of things. OpenAI is currently seeking $40 billion in funding at a $340 billion valuation. All right. Let me ask you something. Is it going to be harder or easier for OpenAI to raise their $40 billion in funding at a $340 billion valuation if the CoreWeave IPO is a flop? OpenAI cannot allow that CoreWeave IPO to flop. So is this just another case of round tripping? Is this OpenAI, who's looking to raise a whole bunch of money from the investors, giving a whole bunch of money to the cloud computing network So their IPO is successful, so maybe they'll have an easier time getting that $40 billion to begin with. Again, none of these companies are profitable. OpenAI burns through cash like a drunken sailor. I just thought that was pretty interesting. Last one I want to talk about today, guys. This is a story that I think is not getting a lot of attention. Look at Tesla today. Tesla stock down 15.5%. Let me refresh this, see what they actually closed at. 15.4%. They're down another 0.5% after hours. All right. Now, Tesla is selling off along with the market, but note this. Okay, I'm sorry, 15.5%. Tesla loses 15.5%, but look at a name like Rivian, right? Rivian only lost 1.8%. What's going on here? Why is Tesla selling off so much more? Well, you're not hearing a lot about this, but let me just talk about this story here. Molotov cocktails, arson, and graffiti. Tesla facilities attacked in wake of Elon Musk's role in the White House. It seems the love and joy people have transitioned a little bit to the arson and Molotov cocktails. We spent the last 20 years subsidizing this industry, passing laws to pump money into this industry to build charging stations, and now we're burning it down because we don't like the politics of the CEO, for the planet. This article in CBS News goes and released like January 29th to February 11th, reports of Tesla-involved violence and vandalism in Colorado. Lucy Grace was arrested for causing between $5,000 and $20,000 in damage at a dealership. March 3rd, graffiti found at a Tesla dealership. Demonstrators gathered outside. March 4th, police in Massachusetts reported that 7 Tesla charging stations were intentionally set on fire. What are the carbon emissions of burning Tesla charging stations, by the way? I don't know. March 6th, a 39-year-old man accused of vandalizing several Tesla vehicles with stickers of Musk. March 6th, police in Portland, Oregon said at least 7 shots were fired at a Tesla dealership, damaging 3 cars, shattering windows. March 7th, same Tesla dealership was vandalized. An arson at the Loveland Tesla dealership in Colorado. March 8th, 350 protesters gathered outside of New York City. 6 arrests were made, 5 for disorderly conduct. And then, of course, last night, we had another one. Fire burns 4 Tesla Cybertrucks in Seattle's Soto neighborhood. Of course, police are not releasing any probable cause, but 4 Tesla Cybertrucks going up in flames, one after another. Look, guys, Tesla is a marked company here. I talked a little bit about how Tesla committed a kind of like a Kathleen Kennedy with Star Wars. Like when you screw over your fan base, don't expect them to buy your cars. And look, they jinxed. It wasn't Republicans that were buying Teslas for the last 20 years that took Tesla to a multi-trillion-dollar valuation, right? And I'm not excusing what's going on here, but you probably could have seen this one coming. Guys, Tesla is untouchable, in my opinion, for the foreseeable future. We don't know how widespread this is going to be. I know a guy at the firehouse who drives a Tesla, and he says he has shit thrown at his car all the time. It gets spit on all the time. And I'm in rural Pennsylvania, guys. All right. I'm purple at best. All right. So I can't imagine what it's like driving one of these things through Seattle. As long as that's going on, that is dead money over there. And besides that, you've got what's going on in China, a general decline in the EV bubble as it is. So, that's a story you got to watch out for. And I just want to say thank you very much to the Pasta Man who says it's a bubble. Wonder what made you say it's a bubble? What specific one? And he's going on here to say, to quote Mark Baum. Now that was the dancer in Florida, right? Is when he said it's a bubble in the movie. So this time around, what is the dancer in the club that makes you think it's a bubble? For me, I mean, AI companies that don't even have products getting $2 billion valuations, that's kind of bubbly, right? I mean, I was suspected overvalued. Maybe I had used the word bubble before that. But when you see companies that don't even have products getting, how many figures is billion? What is that? 10-figure valuations?
Yep.
No way, guys. No effing way. I agree. It's a bubble. What isn't a bubble right now is a better question, maybe, right? Crypto, bubble. Stocks, bubble. Bond market, we haven't had price discovery in the bond market since 2008. Bubble. Housing, bubble. Commercial real estate, bubble. What? I don't know. What isn't a bubble? Gold Gold is at all-time highs. You could argue gold is not in a bubble, right? Gold's probably still undervalued, right? We still don't have true price discovery in gold. There's still more paper gold circulating out there than physical. So maybe precious metal is probably the one thing that isn't in a bubble at this point. But I agree. This is definitely Mark Baum bubble territory. Anyways, guys, I got a couple other stories that we could go into right now, but I think we touched on some of the big ones. The last one I just want to show you is Oklo. This company, speaking of doesn't have a product. This is a nuclear company that is not received design certification by the Nuclear Regulatory Commission. Sam Altman took a stake in this company via SPAC. They bailed them out. This company would have been bankrupt by now if it was not for Sam Altman bailing them out. They went ridiculously high to like a $57 valuation, and now they've sold off like something like 18 out of the last 20 days. They're down 9.5% lower today on no news. This is nature healing, is what this is. This company, I believe in nuclear technology. I hope we start building small modular reactors. They won't be Oklo reactors. The first ones that get built, maybe it'll be NuScale. It definitely will not be this company. I could tell you that. Miss, you think I missed anything important? I mean, we've been going about 56 minutes now. And any big forces pushing this market down that we didn't touch on?
No, I think we pretty much hit everything that we know about so far. I mean, there's always those news stories like, you know, that ship that crashed this morning or some of the other dynamics that are going on the world politics stage. But I don't see that causing a sorry, I was reading something. I don't think that's what's causing a problem right now. The two things. One is SVB's birthday today. They failed 2 years ago today.
Wow. Interesting. It's also the birthday of the all-time high in the Nasdaq during the dot-com bubble. Wow. Talk about a cursed day, huh?
Mm-hmm.
Okay.
Yeah.
Interesting.
And apparently Wells Fargo was suing JP Morgan over a $500 million real estate loan.
Interesting. 500 million. I mean, did banks that size even notice $500 million bucks? That's interesting. I can tell you one thing.
They're starting to worry about penny pinching.
Okay. Yeah, I could see that getting defensive.
Mm-hmm.
I tell you the one thing I don't think is getting enough attention right now, and I got to give Michael Gayed credit again. I think Japan. I think geopolitics, the trade war, obviously a factor here. I wouldn't assign it a percentage value or anything, but it's clearly a major role in this sell-off. But I can't help but think Japan is playing a bigger role here, and it's the volatility in Bitcoin. It's all those most levered assets are what is hurting the most here: tech stocks, crypto, and to me that just screams Japan. And you know, we had some dirtbaggery the last time around on August 5th when they disabled that buy button or disabled the sell button. I wouldn't be surprised to see people start going down for maintenance again, either in crypto or stock brokerages if this continues. So keep an eye on those Japan stats, the 10-year JGB, the USD JPY trend. All the attention is on tariffs and trade right now, and I'm just not sure that's what it is. It's playing a role. I just don't know how much. Anyways, guys, we've been going for almost an hour. I think we're going to wrap it up there. I just want to say thank you guys for the super chats. Thank you for your time this afternoon. We'll be back tomorrow morning for our regularly scheduled morning live stream. And I don't know, hopefully we got a little bit of green by then, because you don't want to see things going down in a straight line. That's when things get out of control real fast. So hopefully a little bit of bounce, nice orderly unwind. Go ahead,
Mitch. The margin man cometh right soon.
The margin man cometh. I love that line. Yeah. If you get an incoming call and it says margin man, do not answer. Ghost him.
All right, have a good weekend, guys.
Yep. Have a good week. And well, I'll see you tomorrow morning. Thank you again for the super chats. Thank you to all my Patreon supporters and my magnanimous melon heads on YouTube. Hi, Mom. Hi, Dad. I love you guys. Don't forget that like button and the subscribe button on the way out. And until next time, live small and dream big.